All right. Well, good afternoon, good evening, or good morning, everyone, depending on where you're joining us from. And welcome to episode 12 of the iFlip AI Circle. I am, of course, your host, Aaron Yoon. And joining me, of course, is none other than iFlip Chief Investment Officer, Kelly Korshak. Welcome, Kelly.
Hello, Aaron.
So we have a great show today. We've gotten into the trend of like making some predictions. I don't know if you've noticed that if you've been joining us over the last several shows, last several episodes. And what that's gonna be a bigger thing. We're incorporating a lot of fun stuff, more trivia, more predictions, and we're gonna start incorporating trivia about the predictions. So it would benefit you most to stay tuned every other week for each of these AI Circle episodes. So the first thing we're going to start off with, before we can get to any of that, is what I know is everyone's favorite part of the AI Circle is the disclosure. So please bear with me as I go through this disclaimer. iFlip Investor Incorporated and iFlip Financial Services are not financial advisors and do not make buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip portfolios that you select are suitable for your investment profile before trading in a live brokerage account. Now, with that out of the way, I am going to pass it back to, whoops, nope, that's not what I wanted. There we go. With that out of the way, I pass it on over to you, Kelly. Please give us a recap of how January went for us.
All right. Well, January was, I think, for Flip, the month of January itself on the S&P 500 was up around 6.5% to 7%. And for Flip, we only caught 3% of that 7% move in the S&P. Before you, I think everybody can see a screen out there. And what I'm hoping you see is the things we've done thus far this year. Here's the beginning of January right here. If everybody can see where I'm pointing. Down here in the S&P 500, S&P's trading around 383, 384 in the beginning of the year. We had a move higher. We got in and we got out. We had a wiggle. We call these wiggles or a chop sometimes. That cost us about 1% on the way up. And then finally we got long, literally when we were on last 2 weeks ago at the last AI Circle. We got long right at that same time. And as you can see, here's our signal to get in. And now we got in the area of about 400 on the S&P. And we're sitting in the area of around 410, 408 on the S&P spider. So we got about, call it just 8 points, 400 to 408. So obviously 1% is 4. So we got a couple of the percent so far this year. And by the way, most of our models got long many things, especially in the technology sector. Most of you know the technology sector had a much bigger rally from the complete oversold areas from last year. And that rally was more along the lines of 11% for the NASDAQ. And we have now long things like Microsoft and Tesla and Meta, whatever it is, a lot of those stocks finally gave bull signals to get in. But where do we go from here? My thinking is that, again, as I told you last time, the market looks good in the short run. However, I feel that this will change sometime in February to March. I'm still looking for moderately higher prices in the S&P 500 and not so much in the NASDAQ currently because the NASDAQ's run was so big. And thus, I'm going to come up with my first prediction for February. It's still early enough. The market's up. I suspect that this market will be down in February, marginally. So right now we're up, I suspect by the end of February, and we'll do this in 2 weeks. The NASDAQ will be lower than it is now. The S&P I predict to be about the same price, a little bit lower or higher. Again, in our next AI circle 2 weeks from now, which will be putting us towards the end of the month. And so we'll take those two predictions as the first ones. So we can keep an eye on me doing this. And we're going to try to do this, and we're going to try to score me, because I'm going to be using I have the benefit of using the AI and knowing what it's doing, and the algorithmic approach as well. And generally, I'm going to bet on both of those things give me maybe a little bit of an edge, and hopefully that transcends to you using our smart folios. But either way, it's good to kind of keep an eye on it and see if I can, beat the system. So we're going to start scoring that with Aaron, and we'll find more details as we go.
Absolutely, Kelly. I just wanted to make sure that I had you on camera. So I don't mean to make you repeat yourself, but I'm going to ask you to do it this one time. Can we go through those predictions
Yes.
one more time?
Sure. I predict the S&P 500 could be moving 10 to 15 points lower or higher from here by the end of February. 10 to 15, in other words, it's going to move up or down about 3% from here by the end of February. My instinct is it's going to close around this area to a little bit higher. The NASDAQ, I suspect, will move about the same, up 3 to down 3 in general, but I suspect it'll be a little lower as people take profits after a very stellar January. How's that, Aaron?
Gotcha. So if we had to pick you're predicting a movement of 3%, give or take. But if you had to pick, you would lower. Okay.
Yeah, maybe 3% lower to the downside. I think the market will move, and I'm going to guess 3% lower by the end of the month on the NASDAQ. In other words, to the downside of that range of up 3 to down 3. And I suspect the S&P will have a similar move, up 3 to down 3 from here, but it'll end up around here to a little higher.
Okay, awesome. And I'm just going to pause here real quick, because I'm not sure if today is a big day or people are getting excited for the Super Bowl or something. But we don't have the usual number of viewers that we typically have. So if you could help us out by letting people know that are fans of iFlip and would like to hear this kind of stuff and participate in the trivias and the predictions, please share with your friends and family on social or whatever the case may be, and bring them on over here. We like to do the trivia questions when there's about at least 20 to 25 people in the room, because it's more fun that way. And right now we only have about half that. So just wanted to put that out there. I'm not, the only thing I can think of is it's Super Bowl week. Everyone's out shopping for a new TV or something like that. Okay. So, and we're not going to make any Super Bowl predictions here. I don't know if that part was clear. But we did have some predictions about the market last time, and you did say we're going to start with the Bitcoin call that you made, that I think you want to slightly modify. So before, in January, for anyone who wasn't with us, Kelly predicted that Bitcoin could go as high as 30,000. But Kelly, do you still feel that way, or do you feel differently now?
Again, because I'm a trader, I do feel differently. The market has really had its explosion higher. Bitcoin, of course, has also had that. I feel Bitcoin can still go to 30,000, but I think it's going to taper off, because the market is going to slow down in February and try to digest the overall stock market and the Bitcoin market. The cryptocurrency markets, I think, are going to try to assess their gains and consolidate them to make a decision if they're going to go higher or lower. My instinct is still higher. I like owning it. I would never be a seller of this product at this price. However, I do feel that the jump of around 40% from the recent lows makes me think it's time for pause, even in this market. And I feel that right now it'll digest these gains and hold on to them for the remainder of February. So no more movement higher yet in
Gotcha.
Ethereum, Bitcoin, Litecoin.
So if you have to place a number to it by our next AI circle, which is pretty much the end of February.
I'm going to say it's going to be right in here, right in this 23.5 area. I think we're going to digest.
Cool. Awesome.
Yeah. Now, I'd like to change screens. I put this screen up for everybody, so for those of you out there, you can see how I see the Smartfolios and the S&P in various markets behaving. I look for little triggers, both either from the algorithmic portion or an AI portion. You can't see it here, but there's an AI driver behind here that you can see if I go back that I keep an eye on. There's these little dots that tell me that there was something to do with AI made a decision. So these are the things I keep an eye on to be able to help make a prediction and also to get you in and out of the market based on the portfolio and symbols you have. But right now, Aaron, I'd like to change to another screen. I'm going to change to another window. And now I'm going to share this window coming up right over here. Share. So now, I think, does everybody see this?
I don't think you shared the window.
Okay, let me do it again. Share. It says I did. Let's do it again. How about now?
I'm not seeing anything that I can display on the screen here.
Says I'm sharing it. There. Let's try it again. Says I'm not sharing it. There. I'm looking at Bitcoin, and you don't see the shared screen.
No, I don't see it. I don't have the option to show what you're showing. I can try to pull up Bitcoin on my screen if you.
No. It's important to see it from my perspective.
Okay.
So I'll just talk to it here. I'm sorry I can't share the screen.
It's okay.
We are trying again a newer version of putting this together. I have a feeling a lot of people might have trouble getting in because I certainly did also when I did it the first time. The screen I'm trying to share is a picture of Bitcoin and a few others because it helps me have my narration of what I want to talk about. Bitcoin, if you look at it from a screen, just try to visualize that, again, it is consolidating. It made a huge move through January, but now it's been consolidating in around the same prices for the last 3 weeks. So that is actually a very good sign for the market to go higher. But when the stock market moves lower, which is in chops around, I don't see the Bitcoin market, the cryptocurrency market really advancing much from there. I'm also going to now mention another thing I made. I talked about the bond market. Again, I really wish I could share the screen if possible. But the bond market definitely does not look good. And that's one of the reasons I have a cautionary mode for the equities market and why I only expect consolidation for the remainder of February, marginally up again as in the S&P, but not for the NASDAQ. And it's because I'm seeing the long-term 30-year bond market and the 10-year note market start to come under heavy pressure. And so those markets have advanced also, but they from the downside, they bumped up against a 200-day moving average and they have backed off again. And the reason I mention that is because, as you know, last week, the job numbers came out. They were extremely strong. Matter of fact, in my lifetime, I've never seen the job numbers of 500,000 people on the payroll from 1 month to the next. I've often seen, after I see something like this, revisions. And I suspect that the market may be interpreting that a revision may be coming in the following month. So when we get the numbers at the first Friday of next month, look for some crazy numbers to come out. Nothing like 500,000. Maybe it could be almost flat. So to me, the number seems to have been calculated in some way that I have never saw before, and not a person I know, and I've called them all about that job numbers, could ever explain 500,000 new jobs in January. And it makes absolutely no sense. So again, I'm befuddled by that, and I don't think it's accurate. And that's one of the reasons why I feel that the bond market is going to be under pressure, as I suspected last time.
Do you think that there was the calculations were incorrect? That's why they're going to revise them and say that we were wrong about it, and they're saying like, okay, never mind, that wasn't the right number. This is the right number.
Precisely. This happens, by the way, a lot more than people think. But the size of the adjustment seems enormous. Before, we're trotting along between 170 and 230,000 jobs. And then all of a sudden in January, it jumps after Christmas, by the way. It jumps to be 500,000 jobs. It is the single biggest job number I have ever seen. And again, every time I see these large numbers, they get revised downwards the following month. So the market knows that too. I'm not the only person that knows the numbers were huge. I think that has filtered down to a lot of the public. And that's why the market, since it knows, is saying, maybe I'll wait a little bit here and see if that numbers are good or those numbers get revised. Because if they get revised, the stock market should be lower. And that's why they might be starting to feel a little pain here in the market. If you noticed over the last 3 days, it tends to open lower, finds a little bid, but at the end of the day, it doesn't. Outside of yesterday when we had Powell speak favorably, all of that was given away today. So again, the market moves up 1% or so. It can move down 1% within 30 seconds with the new buy and sell programs that are being executed in the markets nowadays. So it's very difficult to be able to say 1% up or down means anything. We'll know something when the market moves 3% in a day or 2.5%. Right now, trying to digest all of this information. So the bond market does not look good to me. I'm also noticing something else. You might have noticed also some precious metals have been doing well, but they've also fallen off because of the stock market's rally recently. Not too bad. I'm not an owner of gold or silver or any of those kind of things right here. I'm still angling more towards cryptocurrencies if I'm going to own anything like that. Finally, a few stocks. Tesla, as you know, just literally over the last week and a half has rallied about 100%. So when you rally 100%, it's very difficult to take out your checkbook and buy more of it. And rarely, even though, of course, it was enormously oversold, when you rally in these kind of magnitude of numbers, it is very difficult to just say it's time to go in and see Tesla back up at 400. It doesn't make any sense when you see moves that big. And what I feel this all was, everybody, is just at the end of the day, last year was a dismal year for the stock market. We remained out of it. This year, January, everybody wants to start things different. There is money pent up on the sidelines, but there always is money on the sidelines. And they decided this year will be better, and they will put it to work. And January was the fact, but they put it to work literally in a month. We'll see how that unfolds in the coming months. That's why last time, and I'll say it again this time, the market is going to digest, probably move a little bit higher in terms of the S&P, and then it'll finally face its realities again, I think, sometime late February or March. So we have a couple of AI circles before that, but in the meantime, I still will hold with my prediction that this market will be down on the year at some point within the next few months. So what does that mean to you? First of all, I'm going to again try to show a screen, even though I've been unsuccessful, but I'm going to try it one more time. Windows. Where is it? If I can get it for you, everybody. Let's see. Oh, that's why. 1 second. Sorry. There. Aaron, tell me if you can now see the screen.
I'm not seeing anything.
Now that's
Share.
something we'll have to take offline and figure it out.
We will. We'll figure that out.
Yeah, that's one thing we didn't test before we came on tonight. The ability.
No, we did. We did test that. We did test, sharing one thing and then sharing the other thing, and it was fine. It just knows that we're live now, and it wants to embarrass us. I don't know.
It's doing a pretty decent job.
Yeah, no, right. It's just no. It just knows.
What I really want to show everybody is, again, and remind everybody how this form of investment works and why it is intuitive. It should be intuitive to all of you why it is successful over time. Again, this was something not that I invented. It is things that were taught to me to use mathematics and, in this case, any kind of tool necessary to find an edge to be in or out of the market. And again, the concept is always this: the markets ebb and flow. They go up and they go down. When they go up, we want to participate. But when they go down, we want to step aside. The only way we're able to do this functionally, to find a better journey in the stock market, is to try to capture the middle 2/3 of any bull market run. Bull market runs can last for years, and they generally do, as we've known since literally 2008, early 2009. And every time the market corrects, we'll give flip an edge. Because when the market corrects, we are not in it. We will not write it down. When the market advances, we will not capture the beginning of the advance. But just as we did 2 weeks ago when we got into the market, we will start catching the advance should that occur now. Then if that's the case and the market should rally throughout the course of the year, then we will be in it. And we will have missed the first 3 or 4%. But that is an easy trade-off when you consider that we were able to miss the 26% down that the market was at one time last year, and the 19% that the S&P was down at the end of last year. So while our viewers and our users stepped aside for that, this year, I do expect the market to be in more often than not, and I do expect it to be a more difficult year. It is not going to be, I feel, a 20% year. I do feel it'll be choppy, probably between up 8% and down 8% at the end of the year. So, but in the aggregate, you should all know that over time, as long as the market corrects, we can outperform the S&P 500. If the market never corrects or corrects very marginally over time, then we will not be able to outperform the S&P 500. But I don't think a soul out there believes that the S&P will advance forever without problems economically or otherwise that cause the market to go down, giving flip and us, the users, an opportunity to buy stocks at cheaper levels. So that being said, I think we're about 8 minutes away. If there's any questions from people out there,
we have a couple of things, but I want to stay on this for just one more minute.
Sure.
If we're using mathematical models and AI, how come we can only catch the middle 2/3? Why aren't we able to, with mathematical models and statistical analysis, why aren't we able to capture 95% of the moves?
Very simple. It's the data. Economic data and price data drive the markets. The data is something that we all know right now is of this instant. All things in the market have been interpreted throughout the day, and they are being fed into the price. So all economic data, all news, for everything from Chinese balloons to the job markets, are being funneled into the market, and the market looks at it, assesses it, and buys and sells. So since we are data driven, those data points come to us, yes, at the speed of light, but that doesn't mean investors respond to it instantly either. And so if the market is steady, even though the data has been interpreted, it's not like AI or even an algorithm is going to generate a signal unless there's some other catalyst. That's why when you look at these things, you might hear a lot of pundits say, oh, just looking at this data is backward looking. We like to be forward looking. But what does that mean? Does that mean they're forecasting and using a forecasting model to determine where price is based on some other math that calculated price in the past and then forecasting it for the future? For example, the way Pepsi-Cola might say we know it's summer and we're going to forecast that in the summer we're going to have greater demand. The markets are not so simple with those kind of forecasting models. The markets are always actually late and just on time simultaneously, which is weird. How can it be late and then how can it be on time simultaneously? It's because the data comes to us and we get it and the market sees it, but that doesn't mean we can actually move on it that instant. So that's why we don't care about the bottom 16th or the top 16th of the market. We just care about the middle 2/3. So if a market moves 20% to the upside, if I can miss 2% or 3% on the downside, and I get long after the market rallies, which is what we've done here, and then hey, the market's gone up a certain amount, and I can get out 2 or 3% before the market makes a high. I've given up about 5% or so, and out of the 20, and I still got 15. That's roughly 2/3. So that's really why we trade this way, is because we don't expect to buy a low or sell a high. Periodically, we can get lucky. These systems work because of the way data comes to us. And that is actually one of the underlying pins of why this kind of methodology of investment works over time. That, and including some other things, which is, how to create symmetrical beta. So when the market goes up, you participate, but if it goes down, we don't participate on the downside the same way. That's why we get people out of the market, which skews our beta. Because if you're in cash, you don't have any beta. Your beta is literally 0, which means you're not moving no matter where the market moves.
Right. And doing that over time is what gives us the edge. And for over a long term, we can outperform the market where you're just buying and holding and absorbing 100% of everything, up and down. Right. Okay, so we are about to get into the trivia time. I did save it for the very, very last minute because this trivia is something that I want very quick responses, right? So that's why I didn't squeeze in a question in between. So I'm going to give you, we are about to get into one last question for Kelly, and then we're going right into the trivia, and it's going to be very quick, okay? So if you're one of those passive listeners and you like to just kind of listen to us like a podcast, now is the time to get your phone or get on the keyboard and get ready to type in an answer that we're going to get to in just a moment, and I'm just giving you a heads up, right after this one last question. Because we did get a question, Kelly, from one of our users that asks about how I think he has a little bit of experience trading, just a little bit, and he asked about how. Let me just bring up the question here first, and it's a little bit long, but it says, "Is iFlip using a 3.5% stop loss on average, or does it vary from stock to stock?" I think what he noticed was we took a 3.5% loss on one of the positions that the Smartfolio was managing for him, and he was wondering if that's a fixed like a hard 3.5% like stop, or does it change? And he's asking, given the rapid rise of the market, I want to tighten my stops and look for good suggestions. And so, can you touch on
2 questions on that? 2 questions.
It is. So I think we can summarize it by touching upon, okay, how does the AI manage stop loss? Is this 3.5% fixed? Is it changing all the time? How does the AI do it?
Can you excuse me 1 second before I answer? Hold on.
Okay, Kelly is going to be back in just a moment. He wants to provide some anticipation and build up before the big reveal. While we're waiting for Kelly to come back, I will say that the trivia question is related to our previous special live stream. So if you're one of those people that were there, then you might have an advantage. Also, if you're just good at financial markets trivia knowledge, that would be good too. But for now, give me just like a yes, I'm here or something in the chat to make sure that I can see the chat messages, because right now it looks a little bit different for me. We're experiencing some technical issues today. I'm not able to see your messages right now. So just give me a quick say hi or something in the chat so that I can confirm that it's working. All right, Kelly's back.
Question. Sorry, everybody. I actually had a hamstring pull on my bottom of my right leg, and I was very uncomfortable, so I had to turn the video off and stretch. It is not a 3.5% stop. Our stops are based on volatility, and so the volatility of the market determines the distance and the magnitude of the stop. So if the market does move up more, yes, we do drag stops, but we drag stops quicker the faster the market moves up, and slower if the market is moving up with low volatility. So volatility determines the stop price. Is it average around 3.5%? I have no idea. I don't care. What really matters is to say, where do you place the stop based on the volatility of the market that you're in? If it's highly volatile, you should trade smaller size with wider stops, right? So that's the first question. Answer, no, it's based completely on volatility and probability. Volatility is also, by the way, everybody, it's a measurement of probability. Now, that was the first thing to answer. He had the other question was, Aaron, help me.
No, that was actually it. That was the question. Now we can move on to the trivia question. The one thing that I did have for you though is, did you want to make a prediction on Tesla for the next AI circle?
Oh gosh, lower. It's about 290 a share right now. I'm going to guess that Tesla finds its way down to 160, 170.
160 to 170 by the next AI circle, right?
Yep.
So we will check if Kelly is right about that prediction as well, and we'll design.
So I'll keep an eye on it to put egg on my face.
Yeah, we'll design some games around that as well. We're keeping track of this. All right, it is trivia time, everybody, and first time attending for Kathy. Welcome, Kathy. Great time to be joining us. Okay, now the trivia question for tonight is. Let me bring it up. Nope, that wasn't it. I misplaced the trivia question, I think.
We might want to delete this episode. Aaron, my screen doesn't work.
So many technical,
the new tech you gave me.
So many technical.
And I have a cramp.
It's such a weird thing. Okay, I don't need it because it's a very simple. It's a very simple question. All right. So if you joined us for last week's training, or if you just know this in general because maybe you're a tax professional, then you know that you can actually hire your kids for if you're a business owner, you can hire your kids and at tax free. Okay, tax exempt for you, tax free for them. Okay, so what is the maximum amount of money that you can hire your kids for? Like, what is the maximum annual salary that you can pay your kids in your business without getting taxed? That is the question for tonight. Type in the answers real quick in the chat. I'm going to make this very quick. You have literally like 60 seconds to put it in there because I don't want you to potentially Google this or anything like that. This is supposed to be off the cuff and off the top of your head. So the closest answer will win. Let's hear all. And if we get multiple ones of the same correct answer, then it's going to be the first one who puts it, the first entry that we see in the chat here. I feel like we're getting a couple of answers here, and we'll put up a timer See, this is one thing that I know, this new thing that I did that will actually work. So timer counting down. Hey, we did one thing right tonight. That actually worked. All right, and we have our answers in, and I think we don't have that many answers in. I don't know. I guess people weren't really participating, but the correct answer is $12,200. Now we have 3 entries with 12,500, but the first one that I'm seeing on my chat here goes to Justice Gaines. So Justice, you are our winner for tonight. Now, what did you win? Well, first of all, in order to qualify for the prize that I'm about to tell you about, you need to have invested in at least one smartfolio on the iFlip app. So we're going to ask that you email us either a screenshot or give us the account number. We could give us your account number. We can check. Just email mailbag@iflipinvest.com with a screenshot of your iFlip account to show that you're invested in any smartfolio and you qualify for the prize. What is the prize? The prize is the recording of the event that we did back in Dallas. Back in October, we had a 2-day event. It was great. Scott, who you all met last week, was one of the speakers there. So you have a deeper dive into all the content that he went over with you last week, and all of that and more, right? Trading stuff, market news stuff, predictions, a little bit of crypto stuff, tons of things, retirement account stuff, wealth building in general. So much content there. It's a $500 value that you're getting absolutely free. Just email your account screenshot to mailbag@iflipinvest.com. So congratulations to Justice Gaines. You are our winner for tonight. And that'll do it for this episode of the AI Circle. Thank you, everybody, for joining us this evening. Of course, if you enjoy content like this and you want to participate in our predictions and our trivia, make sure you like this video. Make sure you sound up in the comments about whether you think Kelly's going to be right or Kelly's going to be wrong about Tesla and all these other things, right? So make sure you sound up in the comments. Follow the iFlip YouTube channel, and we will see you on the next episode of the AI Circle. Good night, everybody.
Good night, everybody.